This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian risk appetite may get a boost from hints of progress in US-China trade talks set to continue in London. The Trump team signalling it could ease some tech curbs in return for access to rare earth materials. The Pentagon set to deploy 700 active duty Marines to Los Angeles in a move that's been slammed by the state governor as the actions of a dictatorial president. And Apple unveils its biggest ever software redesign, but investors hungry for AI advances are left wanting more.
Take a look at how we're setting up in the Asian session. We could see those extension of gains after the MSCI Asia Pacific Index already rose to the highest level since 2021. We're talking about Chinese stocks in Hong Kong already in bull market. We've seen a great few weeks for Korean assets as well. We're now seeing that the current account surplus has narrowed to $5.7 billion. April goods trade surplus, though, widening to $8.9 billion. We'll continue to watch how Korean assets come online. But right now, we're seeing Nikkei futures pointing to the upside of 0.1%. The Japanese yen has been pretty range-bound, very near that 145 level against the U.S. dollar. We are watching the latest coming from the government. Now, media reports here in Japan have said that the ruling Liberal Democratic Party wants some cash handouts in order to help Japanese people with accelerating inflation. But take a look at how U.S. futures are setting up as well. Of course, we had seen a lot of optimism around the chip sector, not to mention, given the U.S.-China trade talks that are ongoing right now in London. We've heard from Secretary Bessent, from Secretary Lutnick, calling these talks a good meeting, also very fruitful. So take a look at U.S. futures not doing much at the moment, but of course we continue to watch the Treasuries segment because we are expecting those auctions a test of demand when it comes to the 30-year and 10-year bonds. Crude prices right now, 65.35 is the level, but Haidi, of course, we continue to see 4 days of protests in Los Angeles that really are ratcheting up the domestic pressure in the United States.
Right, and this was really the criticism coming from California officials, including Gavin Newsom, right, saying that the deployment of the National Guard and now the Pentagon sending 700 Marines to counter these ongoing immigration protests is really just inflaming the situation. You're taking a look at live pictures of Los Angeles at the moment, as Shery mentioned, a 4th day of unrest sparked by these immigration raids. Donald Trump suggesting that Gavin Newsom should be arrested over his response. Newsom suing the administration for the deployment of National Guard troops to the city. We have seen this unrest resulting in looting, injuries to officers, arrests are ongoing as well. But certainly the governor and the LA mayor, Karen Bass, accusing Trump of making the situation worse. Let's get to the ground now. Our LA bureau chief, John Gittleson, joins us now. And certainly things have not de-escalated. What is the latest and what are you watching out for, given that we know that these Marines have been deployed or will be deployed?
Yeah, well, it's the idea of having U.S. Marines on the streets of L.A. it's appalling. It's like, man, it's just beyond conception at this point. It remains to be seen what role they will play. I mean, the National Guard has really not been seen. The big interaction with the demonstrators on the streets has all been LAPD, LA sheriffs to this point. But they've also been using non-lethal weapons. When the Marines arrive, Marines carry lethal weapons. These guys are, trained to take beaches, trained to kill.
What are we seeing in terms of the ongoing tensions between President Trump and Governor Gavin Newsom? Could we see more escalated action, especially around perhaps halting of funding for Los Angeles and broader California?
Well, there could be funding halts. Yeah, that's definitely something that we're watching and waiting for to see what Trump does. I mean, he's already threatened to restrict funding because, A, California's a sanctuary state. LA is a sanctuary city. He didn't like the high-speed rail. He cut off funding for that. He also, back in January when he took office, was threatening funding to LA because he didn't like the state's or the distribution of water system and the way we weren't cleaning up the forest, which he blamed for all the wildfires that were hitting here. So this wouldn't be the first time Trump threatened funding in California.
John, I do wonder the role that the courts might have to play, right? We're seeing these lawsuits either being threatened or on foot. We've heard from the California Attorney General saying that, you know, the sending in of the National Guard and certainly now of the Marines is an abuse of the President's authority and unlawful mobilisation of those National Guard troops. Are the courts, the judiciary, likely to be able to do anything?
Well, the courts move a lot more slowly than you can send troops in and out of the city. I don't really know what, if a judge could order the defederalization of the National Guard. If the Marines replace the National Guard, I don't even know what mechanism is there, frankly, because I'm not a lawyer, to say you can't send in the Marines. It's just like an unprecedented escalation. And, a few days ago, there weren't demonstrations like this. Yes, there are a lot of undocumented or illegal immigrants in Los Angeles, but the violence that happened, that escalated in the last few days, came in response to federal first mass deportation type of raids, and second, bringing in the National Guard to try and respond to those protests. And now, the Marines.
LA Bureau Chief John Gittleson there with the latest on those protests ongoing in Los Angeles. And of course, we are also seeing external pressures for President Trump. Trade talks between the U.S. and China set to continue into a second day in London, aiming to ease tensions over shipments of technology and rare earth elements.
We are doing well with China. China's not easy. We want to open up China. And if we don't open up China, maybe we won't do anything. But we want to open up China. It'll be a great thing for China, a great thing for the rest of the world.
For more, let's bring in senior reporter Jennifer DeLuey in Washington and also our chief North Asia correspondent Stephen Engel joining us from Hong Kong as well. Jennifer, let me start with you. President Trump saying that China is not easy. What was he expecting? This is the second largest economy in the world. But what are we expecting in terms of any concrete breakthrough in London now that these talks continue for a second day?
Well, I think the fact that, the officials from the U.S. and China were able to meet face to face for more than 6 hours and that they're continuing tomorrow was obviously taken as a good sign. It's a development that, signals possible progress in easing these trade tensions. And specifically what, could come out of this is an easing of restrictions on the export of technology from the U.S. Obviously, rare earth materials from China also on the table and being discussed. The U.S. has signaled very clearly it's willing to remove curbs on the export of jet engine parts, nuclear plant equipment, chemicals, and other technology if it can secure assurances that China will ease its own limits on rare earth materials that are used in smartphones and fighter jets and other equipment. So at this point, that seems to be, the outlines of what's possible. Kevin Hassett, who heads Trump's National Economic Council, said earlier today that, his expectation is an agreement in London that will ensure rare earths are released in volume from China.
And Steve, we saw in the data, right, despite this fragile truce, exports from China to the US falling the most since 2020. Other than, of course, a more sort of permanent pause to these tariffs, what does Beijing really want? And I guess, more importantly, what are they willing to give up, given how closely held the supply of rare earths and technology has been over the past decade or more?
Well, clearly Beijing is very suspicious of what the United States is trying to get out of these talks and of this trade war. They definitely want the reduction, if not elimination, of the tariffs, because, again, the pause is only until August and then they resume. So they would like to see that taken away. They'd just like some clarity, and that's why having consistency in talks with the same people, be it Scott Bessent, and then Jameson Greer, the U.S. Trade Representative. And now, in addition, we have Howard Lutnick, the Commerce Secretary, which indicates that those export controls from the United States including some of those that were added after that truce was reached in Geneva, which only added to the suspicion on the Chinese part. So that's why it's clear that export controls, perhaps, as we just heard, could be a bargaining chip for the United States to reduce those that were added after that Geneva truce. So I think the Chinese side is trying to get a gauge of the intent and the end result that the White House is trying to get, and not necessarily whether it's going to be just unilaterally beneficial to the United States. This is, so far, let me just say, after day one of the talks, the Chinese have kept really quiet. I scoured state media. There's hardly anything about the readout of the day one talks. He Lifeng, who's leading the Chinese delegation, walked right past the gaggle of reporters in London, did not say anything. The U.S. side said only a few words, like Howard Lutnick said they were fruitful. Scott Bessent said good talks. He Lifeng said absolutely nothing. Yesterday, the China Daily said pressure and coercion are not going to work against China, which is ready to resolutely counter any ill-intentioned move by the U.S. side. So that really indicates how suspicious the Chinese side is. They are willing to talk, as evidenced by the phone call last week between Trump and Xi, but they're very skeptical.
Steve, how much pressure are Chinese policymakers under right now, given the state of the Chinese economy? I mean, we have seen them trying to make good with other trading partners like the European Union recently.
Absolutely. And the EU is going to be a key one, because EU leaders will be going to China at the end of next month for the EU-China summit. There are talks about possible huge Airbus deal. There's already negotiations that are, according to the Ministry of Commerce in China, on the minimum price guarantees on EVs, possibly reaching a deal at some point this summer. So, again, the Chinese are definitely engaging with the EU. They're also engaging throughout the rest of the world in Southeast Asia, as we saw in those export numbers yesterday, where exports to the United States fell 34%, imports fell nearly 18%. In two-way trade with the United States, but they absolutely boomed with other parts of the world. So China is diversifying its export destinations and its available markets, but it's not enough right now to counter what has been a lot of trade, obviously, across the Pacific to the United States. So, yes, it adds definitely to the pressure on the Chinese economy, as evidenced as well by the PPI, the factory gate deflation, extending its string of deflationary months to 32 yesterday, down at more than 3%. So there is deflation definitely entrenched in China.
Jennifer, I'm wondering how much sort of domestic judicial pressure it is. Obviously, we had the sort of lower court ruling over the legality or the illegality of these tariffs. Do we know if the pause on allowing them to continue to play out might be sustained?
Yeah, we could know very, very soon. A federal appeals court here could rule at any time on whether to continue pausing the vast majority of Trump's tariffs, basically all of those that are predicated on his assertion that U.S. trade imbalances constitute a national emergency, warranting those levies. And so, as we know, a separate court already ruled against these tariffs, tossed them out very swiftly. Another appeals court came in and put that whole order on pause. And the question before that court now is whether to extend its temporary pause. The Trump administration today went to the court and said, please keep this going. It really, the lower court order, if you toss these tariffs out, it really interferes with our ability, the president's ability to conduct foreign policy. And so the administration is making the case that these need to be extended because the legal machinations over this will play out for months. They could go all the way to the Supreme Court. And in the meantime, if the tariffs can't be collected, it really impinges on the president's ability to do business. So we could see a ruling at any time, potentially as soon as tomorrow.
We'll make Jennifer Deloe there and Stephen Engel as well with the latest on those US-China trade talks. Coming up on the Asia trade, we get more on the Trump's team's response to the Los Angeles protests with the Hoover Institution. Plus, we'll be talking market strategy with UBP. They'll tell us why they're lacking healthcare and China tech stocks. Much more ahead. This is Bloomberg.
You're taking live pictures of California right now. Los Angeles has been seeing tensions over anti-deportation protests. We're talking about 4 days of unrest. Some demonstrators have clashed with law enforcement. We have seen vandalism and looting as well. LAPD now saying the police have made arrests on charges ranging from looting, assault with a deadly weapon as well. Still, turmoil is pretty limited to a few small pockets of LA so far. We are now seeing the latest comments coming from California Governor Gavin Newsom, saying that Trump deploying another 2,000 National Guard to L.A. Remember, he has really protested that deployment, calling it unwarranted and unlawful. Now, in his latest post, he's saying that President Trump has informed them of another batch of troops being deployed to Los Angeles. Let's bring in Lanhee, Chen, fellow in American Public Policy Studies at the Hoover Institution. Lanhee, always good to talk to you. Just give us an update on what's happening in California right now and whether you expect these tensions to subside anytime soon.
I don't, unfortunately, expect the tensions to subside, just because what you have is you have protesters who feel very strongly about their perspective on the ongoing deportations that the federal government is undertaking. You have a governor who's pretty dug in. There are political and policy reasons for that. And of course, you have President Trump, for whom immigration is a signature issue. Let's not forget there were two issues that the president really ran on. One was tariffs. The other was immigration. And on both of those issues, we see the president really kind of dug in on his position. And so really this is setting up for further conflict, not for any resolution anytime soon. I thought, Shery, your point is right. This is happening in isolated pockets of Los Angeles. But the imagery is obviously extremely captivating to people here in the United States and around the world.
We've heard from sources that President Trump is also sending about 700 active duty Marines to reinforce the National Guard. How much of an escalation would this be? And also, I guess I'm curious about how lawful this would be, because usually we know that U.S. military are actually forbidden from carrying out domestic law enforcement.
Yeah, there's a couple of legal provisions at play here. Title 10 of the United States Code gives the president a significant latitude, actually, to deploy National Guard resources. And that's something that's already been done. You made reference to the roughly 2,000 National Guard troops that are already assisting in some of the activity in Los Angeles now. The issue in question is really the 700 active duty Marines on top of those 2,000 National Guard troops. Those 700 Marines, in order to have legal authority to go, likely the president would need to invoke something called the Insurrection Act, which is a significantly more challenging piece of legislation for the president to invoke. So there's some discussion about the legal framework here. I think on the National Guard piece of this, the president is in fairly good standing. Obviously, then bringing active duty U.S. military into this does raise the stakes considerably, not just for the conflict, but also the political stakes between Gavin Newsom and Donald Trump.
That law on which President Trump is relying is typically cited in the case of rebellion, domestic rebellion, foreign invasion, by a foreign nation, or the real risk of a rebellion, right? Do you think that standard has been met? The criticism here is that this is sort of a structural endangerment to democracy, and where else do we see this getting escalated to?
Yeah, I mean, this ultimately may get heard by the highest court in the United States, the Supreme Court. The application of this law in this way, as you note, has not happened for some period of time, even during periods of great unrest in the United States. So the legal framework around the deployment of the active duty military into Los Angeles, that is a much more tricky legal question. The initial deployment of the National Guard, the back and forth between Trump and California authorities, that to me was really more of a show, I think, in many ways, by California authorities to say, we're pushing back on President Trump, we're pushing back on what he's doing. The deployment of the military, now I think at 700, that's one thing. If those numbers end up rising and we're talking about a couple thousand active duty military, then I think the legal authority gets a lot more shaky potentially. But we'll see how the courts play this out over the next couple of days and weeks.
Lanhee, I do wonder how, I suppose my question is twofold, how Republicans are feeling about this and whether you're hearing kind of support or perhaps, concerns over how this is playing out. And also, does it feed into the broader concern that, critics are saying that this is sort of part of the broader picture of how we're seeing the Republican Party and the White House kind of push the situation into, an erosion of voter power, for example, in some Republican states, the restriction of voter ballots, for example, the ability to kind of push through bills, executive orders without that popular support. Is that something that you're watching at all, that you're witnessing at all?
Heidi, I think there's a significant partisan divide in America right now, and I think that partisan divide impacts every single issue, including this one. So, by and large, Republicans that I've spoken to, people that we've heard from, are pretty supportive of the president's actions, and predictably, Democrats are largely opposed, led by Governor Gavin Newsom, the mayor of Los Angeles, Karen Bass, both of whom are Democratic Party officials. So you do see this conflict setting up between the parties. And it is on an issue where there is significant controversy. The enforcement of U.S. immigration law is something that has been a source of disagreement between Republicans and Democrats in the United States for many, many years. And in the current situation, what you're seeing is a particularly acute case of the two parties battling it out over a very contentious issue. And frankly, I think the American people are pretty divided. I think most Americans outside of California are pretty supportive of what President Trump is doing. Within California, obviously, it's a heavily Democratic state. I think the reaction has been a little bit different. So what you're seeing is both politics as well as policy play out on your television screen.
Lanhee, as we're speaking right now, we're getting the latest lines from the Ukrainian air defense saying that Russia has attacked with drones and missiles, that explosions have been heard in Ukraine's capital, Kiev. The reason that I mention this is that this is another front that President Trump has been fighting. He's already said that they'll let Ukraine and Russia fight it out for a while. We have the US-China trade negotiations ongoing in London as well. How much does all of this really distract the president's attention right now? Is the administration stretched thin?
Well, I think that there are a number of things going on, as you note, Shery, whether it's the situation in Ukraine or obviously the China talks, which in my mind, there's nothing more important going on right now in terms of the impact on the global economy than what's happening with the U.S.-China discussions. The administration has, I think, the capacity to be engaged in all of these places. The question is where they're choosing their time and where they're choosing the energy to be engaged. Obviously, the economic team is in London, engaging in those negotiations. You've got the domestic immigration piece, largely led by Stephen Miller, the White House Deputy Chief of Staff. So I think the White House has the capacity to handle all these things. The question is kind of where the president's attention is, and it's pretty clear that at least with respect to the situation in Los Angeles, he's relishing the conflict with Gavin Newsom and Democrats on this issue.
There's certainly a lot on the docket for the president at the moment. Lanhee, really great to have you with us. Lanhee Chen, who's the fellow in American Public Policy Studies at Stanford University's Hoover Institution. More ahead on the Asia trade. This is Bloomberg. Take a look at how we're setting up when it comes to this Tuesday session as we continue to wait for more progress when it comes to US-China trade talks. Trump saying that China's not easy when it comes to these trade negotiations, but they are ongoing.
Take a look at how futures are setting up early in the Asian session. We are seeing U.S. futures not doing much, but after already gaining marginally overnight, we're about 2% away from the February peak. We've seen such a turnaround from sell-off to full recovery in just under 2 months. Nikkei futures pointing to the upside. We could be extending 2 sessions of gains already. Sydney futures not doing much at the moment. But let's bring in Bloomberg MLive strategist Mark Cranfield. Mark, because as I mentioned, really the turnaround, not only for U.S. stocks, but MSCI Asia Pacific right now trading at the highest level since 2021 into bull market, up more than 20% since its April low. Do we have further to go when we're seeing so much potential optimism coming from trade talks?
Equity traders seem to be built on optimism. They seem to have a wonderful view of the world where everything is good, it gets better, and it's very hard to dissuade them of anything else. Even though we have evidence on the Bloomberg terminal that the tariffs are really kicking in. If you go to our systems there, you can see that the real tariff rates in general are at least 7%, way higher than they were before President Trump started imposing tariffs on people. So even though a lot of them have been deferred, some are really already in action, and they're clearly there. The evidence is already happening, plus on other products like steel and aluminium. But investors are choosing to ignore it. And most of that is to do with the momentum in terms of the talks between the US and China. Although there were no fantastic headlines yesterday, no great sound bites, at least the talks are continuing. We're not going backwards. And as far as equity markets are concerned, it's about looking ahead. It's about predicting and pricing where the markets are going, where the news flow is going in the direction for the months ahead. And for now, global investors are generally satisfied that things are going to get better, that the worst in terms of trade tariffs are behind us. So you can imagine what the reaction will be if we do get a big setback in those US-China talks. That is certainly not priced into markets right now. They're looking at a very optimistic blue skies kind of scenario. They are not considering anything like a worst case or a big setback. So that's how the outlook is for the time being. And of course, those things can change. So people will be looking for how those developments go, that they continue to make steps forward, and that will reinforce this bull market picture that we've noticed to appear here, particularly here in Asia as well. In the background, of course, you've got the Federal Reserve to be concerned about as well. People are pricing fewer interest rate cuts on them. They may not even come until next year. That could be something that affects the market as well. But for now, equity markets are mostly interested in the fact that they see a better story ahead. Companies can still make money. Tariffs are not rising, but they're not too high. And that for now, people are talking to each other. That's better than not talking.
Mark, what about anxiety levels when it comes to Treasury investors, right? It was a pretty quiet session, but of course we've got a big auction coming up this week that we'll be watching very closely. But I was looking at rising rates when it comes to credit default swaps. Is that another kind of way that we can see that rising anxiety over the fiscal situation?
Yeah, certainly. I mean, global investors have to make a choice here. They have to look at the US picture as a whole, and that's across different assets. So although equity investors may be happier, if you look at bonds and the currency, for example, you can see a lot more caution is coming into play, whether it's the Treasury curve or the US dollar itself. That's where macro traders are expressing their view that they don't like some of the things, or they're very uncertain about some of the things which are happening in terms of US policy. So what markets are starting to do is to pricing some kind of a discount for US bonds. They want to have a fatter premium compared to other markets, because the risk is that the US is going to continue to have a fiscal deficit. It's going to get worse. There could be another downgrading of the US sovereign rating. We've already seen it come down recently by Moody's. Other people may consider that the deficit justifies doing that again. And then you've got the US dollar, which is the cleanest macro trade as well. So further weakness in the US dollar, which won't be helped by what's going on in Los Angeles right now as well. That's a negative for the currency as well. So you put all those things together, and then you've got this sequence of auctions, which we've already seen some sloppy auctions from the US this year. We've got 10s and 30 years coming up this week. 30 is the one that people are most concerned about, but they should also be fearful of the 10-year as well, because people get very complacent that, oh yeah, we issue 10-year bonds on a regular basis, so it should be no problem. But if you look around the world, it's getting more difficult for particularly the major countries. Japan itself, there's a story going around that Japan may taper its purchases of JGBs, but that's going to just shift the emphasis to the short end of the curve. There won't be fewer JGBs out in the world. There won't be fewer treasuries out in the world. It's just a question of which duration they're going to be in. But if you shove them down the throats of investors, they won't be able to digest all of those bonds, and there will be a pushback. So these auctions this week from the US are not necessarily going to go smoothly, and there could be a fallout, a global one, because if we get some friction there, it could spread to Japan, Germany, and other parts of the world.
Yeah, we also heard that Japan has offloaded some German government bonds as well. But talking about the weak dollar, on the other side of the trade, we are seeing advances in the offshore yuan, onshore yuan as well. Of course, optimism about the U.S.-China trade talks as well. Chinese stocks in Hong Kong also entering bull market. Is there more upside in Chinese assets?
it looks as though global investors are beginning to put China in a different bucket to some extent. They're giving the benefit of the doubt to the Chinese authorities that their stimulus, which is very targeted towards what's happening domestically in China, that's sustainable. They're keeping interest rates very low, which is a very significant factor for helping to support the equity market. If you look at short-term Chinese government yields, they're well below 2%. That's a low bar. If you're an equity investor, you only have to beat something which is around 1.5, 1.6%. Well, that's not too difficult, particularly if the Chinese government is stimulating various parts of the economy. Companies in China will be able to earn decent profits. So your benchmark is not too difficult. That supports people putting more money into the equity market. And at the same time, you've got the currency stabilizing as well. So all in all, from an international investor's point of view, China is starting to look more interesting.
Bloomberg's Mark Granfield there. So let's stay on these ongoing trade negotiations going into a second day in London. Our next guest says the base case scenario from these talks is an extension of the current truce. Joining us now is Emily Kilcrease, Senior Fellow and the Director for the Energy, Economics and Security Program at the new Centre for a New American Security. Emily, always great to have you with us. And that sort of goes to the crux of what fundamental progress and sustained progress we could see in this relationship, right? We know that it is, the greatest competitive strategic relationship of our time. We know that their goals are not necessarily going to be able to come into the same path. So how difficult are these talks, particularly if we're moving beyond just, top-line tariffs to talks about areas of national security and priority like rare earths, like technology?
Yeah, there's no question that the talks in London are going to be extraordinarily difficult, and we should keep low expectations for any huge results coming out of the talks. I think a best case scenario is that they're able to maintain some of the momentum that they got out of the talks in Geneva, that they're able, candidly, to clear up some of the disagreements that followed those talks and that also came up following the Xi-Trump call just a few days ago. There's been disagreement over what the agreement was. So it's going to be really important that they come out of these London talks with a common sense of what have they agreed to and what steps are both willing to take to de-escalate what could be a very damaging economic war that has started to spiral out of control. The fact that we're seeing some of these technology restrictions, the rare earths restrictions, really on the table for conversations should worry observers, because these are issues that aren't traditionally part of trade talks. It just shows the risk that without careful management, this relationship could really go off the rails.
You talk about sort of the ability to kind of get a kicking of the can down the road. Is that sort of a fair way to characterise it in terms of an extension of this truce? We're also kind of not really expecting, in the style of the Trump administration, to get very detailed agreements as well, right? Do you think the rest of the world watching this are likely to be disappointed? And how does it set up when it comes to, obviously, all of these other trade negotiations and talks that are still in progress?
That's right. I mean, I think a scenario where they come out of the talks and there's agreement to de-escalate is the best that we can hope for. It would be really surprising if we saw commitments from either side to address some of the core structural issues in the bilateral economic relationship, or real meaningful movement on some of the national security-based economic restrictions that have built up over time. Now, there's an important exception to that, which is that there have been these export controls imposed by China on rare earths, as well as a spate of new export controls imposed by the Trump administration in just the last few weeks. Those are kind of in a different bucket. Those are escalatory measures as we're kind of fighting out this trade war. Those can come off, I think, without undermining the national security goals of both sides. But those have to be watched very carefully to see how far both sides are willing to go when it comes to the core areas of national security. But again, I think really the best case scenario is just, can we get out of some of the escalatory spiral? Can we get the economic relationship back onto the track it was before any of this tariff and other escalation started? That's the best case scenario. And then maybe there's an agreement for future talks. Maybe there's a pathway to maintain some sort of truce. But I would limit my expectations to that.
Could the de-escalation of tensions come from really sideline talks with other partners of the United States? We heard from the China Commerce Ministry that they offered to speed up the approval of rare earth exports to Europe. We know that the Chinese public also hasn't been too happy with President Trump in Washington as well. Is this one way to save face, make friends in other parts of the world, and also help to really cool down the temperature when it comes to rare earths and tech exports?
Yeah, look, if China's smart, and they certainly know how to play this economic warfare game, they're going to be looking to leverage this moment where the U.S. is kind of on the back foot with a bunch of its trading partners. It's picked a lot of trade fights. China's going to try to exploit that. So they're going to try to present themselves as the more reliable partner. They have a huge advantage when it comes to rare earths, which every other country around the world needs. And so if they can play nice with these other countries in this moment where these other countries are also going through extraordinarily difficult relations on the trade front with the United States, that's absolutely what they're going to do moving forward. They can't get out of trying to resolve the relationship with the United States. The U.S.-China relationship is just too big to ignore. But it's not just the bilateral relationship that either side is worrying about. They also have to worry about what has really become a multi-front trade war because of all the Trump tariffs.
How much did the phone call last week between President Trump and President Xi Jinping help cool things down, especially as a circuit breaker? And could we see more willingness from Beijing to do this?
It certainly helped. It was certainly something that President Trump was pushing for, and it is, anytime you see the two sides talking, that is progress. So the more that they can keep those communication channels open at the leader level and at the cabinet and technical working level, that is a good sign. That means talks are progressing and that both sides see value in continuing to have those communications. I would still keep expectations low, but again, this is the state of the relationship that we're in now. Having talks at all is better than having no talks.
And it's interesting that I think Beijing has, chosen, perhaps graciously, to give that off-ramp, right? When previously, in fact, going into these London talks, we hadn't heard much other than a chastising of the US for what it saw as breaking the agreements made in Geneva. In terms of the gamesmanship, obviously, initially, it was seen that President Xi had come out on top. We've now had the emergence of the taco trade, which we know that President Trump isn't particularly pleased about. Do you think that either side still has an upper hand, both economically and perhaps psychologically, in these negotiations?
One thing I'll be watching to answer that question is exactly what the U.S. is putting on the table when it comes to tech restrictions. I do think if we come out of these London meetings and there's been an agreement by the United States to roll back some of the chip export controls that were put in place, not just in the Biden administration, but really starting in the first Trump administration, that would be a clear victory for the Chinese side. I hope we don't get to that point. I think it would be likely bad for U.S. national security interests, but I think it'll be an important indicator of just how much the U.S. feels like it has to give to get out of this escalatory cycle. I think China did play the rare earth card fairly effectively at this point. The U.S. simply doesn't have alternative sources for this absolutely critical input that goes into most of our economy and also our military platforms. We can't not have access to that rare earths capability. China knows that, and I think they've played that very well. And so coming out of the London talks, I think it's a key question to watch is how much is the U.S. Having to give in order to get back the prior access.
Emily, really great to have you with us. Emil Kilcrease, who's a senior fellow and director of the Energy, Economics and Security Program at the Center for a New American Security. Take a look at some of the other stories that we're following this hour. And the leader of Japan's largest opposition party, Yoshihiko Noda, says the country should use the expansion of the Trans-Pacific Partnership as leverage in trade talks with the US. His comments came after Japan's chief negotiator returned from a fifth round of talks in Washington with no reprieve from tariffs. There's been a little progress in talks despite phone calls between Prime Minister Shigeru Ishiba and Trump. The UN nuclear watchdog, says Iran's stockpile of enriched uranium cannot be ignored and urged nations not to turn a blind eye. The warning comes as the IAEA's Board of Governors met this week in Vienna. The agency reported last month that Iran's inventory of close to weapons-grade uranium is at record levels, growing by 50% in the last 3 months.
Still ahead on the Asia trade, Apple unveils the most sweeping software redesign in its history, but fails to move the needle on its AI strategy. We wrap up the annual developers conference next. This is Bloomberg. You're watching the Asia Trade. Here's the latest from the corporate front. Bloomberg has learned that Barclays is preparing to cut over 200 investment banking jobs. Sources say staff in global markets and research may be impacted, with managing directors the most senior roles affected. The move is meant to give the bank more capacity to invest in priority areas such as European rates, equity derivatives, and securitized product trading. Vietnamese EV maker VinFast has reported a net loss of about $712 million in the first quarter. That's 20% bigger than a year ago, despite revenue growing by 150%. The company faces rising operation costs tied to its global expansion plans. VinFast aims to deliver over 200,000 vehicles in Vietnam this year, while doubling global deliveries. Disney says it must pay Comcast almost $440 million more to complete its purchase of the Hulu streaming service. The transaction will reduce Disney's net income in the fiscal third quarter. Disney has already paid nearly $9 billion for Comcast's one-third stake in the business, valuing Hulu at around $27 billion. But Comcast has argued that the business is worth much more. Warner Brothers Discovery shares gave up a 13% opening gain to close 3% lower after announcing a split of its fast-growing streaming business from its legacy media channels. The move unwinds much of the 2022 merger that combined Warner Media and Discovery. The streaming and studios business will be led by CEO David Zaslav and will hold a 20% stake in the new global networks business.
Shery, take a look at how we're seeing commodities play out as we continue to sort of wait and see what comes out of day two of these ongoing US-China trade negotiations taking place in London. We did see a little bit of a move higher when it comes to some of these sort of China growth proxies like copper, for example, as those talks kicked off. But when it comes to iron ore, we're seeing that extension of the retreat there really being weighed down by the Chinese data, the trade numbers, the deflationary pressures as well, and lagging imports. Those year-to-date import numbers 5% below last year's pace. We've seen iron ore off about 6% this year, and really following that retreat of the economic challenges, the trade war tensions. We are seeing gold also pretty flat at the moment. That sort of gold for commodities rush, signalling just some of the anxiety over the ongoing trade talks. Crude at the moment holding a little bit of an advance there as oil traders continue to track progress on trade as well. More ahead on the Asia Trade. This is Bloomberg. Take a look at the latest state of play when it comes to what's going on in downtown Los Angeles as we continue to watch these developments. LA now in a fourth day of unrest. We've seen a number of developments, including the deployment of 700 Marines. This situation continuing to really escalate, with California also suing the US for the use of the National Guard in these protests as well. That deployment has been criticised by Californian leaders there, sent in to quell unrest over the president's immigration raids, but critics saying that it has sort of just worsened and inflamed the situation as well. These ongoing tensions over the anti-deportation protests are continuing to play out. Shery.
Right, Heidi, we'll continue to watch the latest developments in California, as we're also watching here in the U.S., here in Asia, especially in trading across Japan and South Korea. Some of those Apple suppliers as well. Apple has unveiled its most sweeping software redesign yet and big updates to its operating systems at its Worldwide Developers Conference. But it failed to impress investors who are looking for more on the AI front. Let's bring in technology reporter Mark Gurman. Mark, so we saw some AI features, but artificial intelligence was not necessarily front and center, right?
AI was not front and center as we anticipated. This update was more focused on the user interface, the way the operating system looks and works. Features like the phone app, the Safari web browser, look to scroll on the Vision Pro. But in terms of new AI features, it was minimal. The biggest update on that side was Translate, a competitor to Google Translate that they're making part of Apple Intelligence. The ability to combine two emojis into one Genmoji, some new AI-related developer tools. But from a standpoint of new AI features for consumers, there was little to nothing.
So this sort of failed to dazzle investors. Is there more in the pipeline to come? Because the disappointment when it comes to AI has been an ongoing theme now.
Of course, there's a lot in development from Apple right now. There's several features coming next year. There's a new calendar app and health app that both leverage artificial intelligence. There's also a major revamp to Shery called LLM Shery that uses the underlying large language model technologies, basically what OpenAI is known for and what Google's known for with Gemini. So that change will come probably in a year or two. So we're still a ways away from a major AI comeback for Apple.
Mark, what was sort of, I guess, exciting to you, right, as someone who's been following this for a very long time? Was there anything that jumped out at you? Is there anything that you think will kind of counterweigh some of the demand side woes, particularly major markets like China?
I mean, Wall Street analysts are welcome to worry about whatever they want to worry about. I'll leave that to them. As for me, I'm pretty impressed with the new user interface, and I'm pretty impressed with the new multitasking changes on iPads. For those who actually use Apple products and don't just comment on them, the changes were actually pretty overwhelming in a positive way. I think there's a lot of good stuff in the operating systems. The problem is we're talking about operating systems, so legacy infrastructure here, whereas much of the rest of the industry has moved on to artificial intelligence and new ways of interacting with computers.
Bloomberg technology reporter Mark Oman there. Let's take a look at some of the stocks we're watching as trade opens in Australia, Korea and Japan shortly. And some of them will be those Apple supplier stocks as well that will be in focus. And of course, Australia coming back online after that 3-day long weekend. We'll continue to watch those trade talks too. The market opens are next.
This is the Asia Trade. We're counting down to Asia's major market opens, and we could see more gains in the Asian session. The MSCI Asia Pacific already at the highest level since 2021, Haidi, but of course ongoing trade negotiations between the US and China in London really stoking that optimism about a potential deal.
Yeah, and still a fair degree of anxiety when it comes to global bond markets, right, and particularly treasuries. It was a softer session, but still, of course, looking ahead to a key auction later on this week. But also, we could see that sort of ongoing sentiment impact as we see the immigration protests and the efforts by the Trump administration to try and quell those protests in Los Angeles. That is still ongoing.
Yeah, ongoing for 4 days now, and we continue to see the downside pressure when it comes to the U.S. dollar. But take a look at how Japan is doing right now. The Japanese yen holding steady has been really narrow range trading this past week. We're still close to that 145 level against the U.S. dollar. Do watch out for those retail stocks here in Japan, because we have heard from local media that the ruling LDP has decided on cash handouts in order to help Japanese people with accelerating inflation. The topic's up 0.3% at the moment. Do watch out for those Apple suppliers across the Asian session, including in South Korea that's coming online right now. Apple unveiled some updates to their software platforms at the Worldwide Developers Conference. Take a look at how the Kospi is trading right now, gains of about 0.5% already. We were at the highest level since July of last year, given that optimism about a new president after 6 months of political turmoil. We got the April current account balance also narrowing to $5.7 billion surplus. Of course, we continue to watch, Haidi, the trade negotiations on all fronts, the tariff uncertainty in South Korea as well.
So much uncertainty, right, when you're talking about all aspects of trade, but of course the key focus being on any developments being made between the US and China. But take a look at how we're seeing after a 3-day long weekend. Of course, it was a public holiday for Australian markets yesterday. We are seeing the ASX just coming online, a little bit muted, but about 0.1% higher there. Perhaps looking to play a little bit of catch-up. Of course, there's quite a proxy relationship with a number of Australian assets, in particular the Aussie dollar, with how we see developments in China. Of course, we could also see a bit of a sort of muted reaction, given that we did see some pretty concerning disinflationary data as well as the trade numbers out of China yesterday as well. The Aussie dollar is looking pretty flat at the moment, and as I mentioned, we are watching Shery very carefully when it comes to what happens with Treasury markets, given the growing levels of concerns among Treasury investors.
Haidi, let's bring in Kieran, Calder, head of Asia Equity Research at UBP, because we continue to watch Chinese assets. Kieran, good to have you with us. I want to start you there because we saw Chinese stocks in Hong Kong entering bull market. You're underweight when it comes to Chinese assets. Tell us a little bit about what's behind your rationale and whether you're a little bit more optimistic given the ongoing talks with Washington.
Morning. Yeah, we are a little bit more optimistic on a couple of things in China. So, first of all, within the underweight view, we have a preference for the tech platforms, which we think are growing again after a long period of perhaps over-regulation, and pretty immune to tariff impact. So we like tech within China. One of the main reasons that we've been underweight China has been, there is not yet a final resolution to the property sector, but steps are being made, so that may be improving. And then finally, as you mentioned, talks with the U.S. are going to be pretty important. We think that the Chinese authorities will want to start to clear the decks on some of these things by the end of the year as we head into the next 5-year plan cycle. So we're relatively positive on the discussions that have been going on, first in Geneva, now in London.
Yeah, U.S. stocks have been on a tear as well. We're talking about a turnaround of from sell-off into really this full recovery in just under 2 months or so for the S&P 500. We're about 2% away from its peak in February. Do we have more room to go in the U.S., given, of course, also the tax legislation plans that are in place right now in Congress?
Well, we think, there can be upside from here, but we had a big event with 200 of our best clients yesterday, and one of the main concerns from our clients are, that returns that we've seen from the S&P, which is slightly positive now for the year, is down 10% in euros or down 5% in Sing dollars. So we think the weaker dollar is part of the global reset that the Trump administration is trying to engineer, and we really need to be careful there. Against that, we have a full allocation to global equities, including the U.S. at the moment, with a preference for 2 sectors. One, tech, particularly software rather than hardware, which would be more impacted by tariffs. And then also we've become more positive on healthcare after a period of underperformance so far this year. And there we like pharma versus some of the medical devices names which have run already this year.
I wanted to also ask about Europe, but do you think the rally there is overdone, particularly the defence and sort of rearmament story, or is there more to go?
We think there's more to go in Europe, and it's really a beneficiary, maybe ironically, of the domestic focus of the U.S. at the moment. So you can't underestimate the sea change of a country like Germany deciding to invest €1 trillion in defense over the next 10 years. So we think although defense stocks obviously have run significantly, we think that story's got legs, and we think a corollary of it is the banks. So banks, obviously a lot of the investment's going to go through banks or through vehicles that banks can earn fees on, et cetera. So, within Europe, we've got, we think, a strengthening currency against a backdrop of Europe, first of all, invests in itself, which hasn't happened for a while. And then secondly, prepares to defend itself, which is, again, part of that. So we think the story in Europe looks okay still.
I know you mentioned that you do like Chinese tech. How do you define, I guess, Chinese tech opportunities that are not going to be affected by geopolitics?
Well, so I mean, for us, names like the tech platforms, the gaming platforms, services in general is not explicitly targeted by the tariffs. So that's one thing. And then secondly, although we see headlines around, for example, Alibaba tying up with Apple on AI, which may or may not fall into a sort of political target. Primarily, most of their business and a lot of the tech platforms is domestic. So really driven by domestic activity. And again, heading into the next 5-year plan, we really do expect the authorities to focus on emphasizing consumption. And if you consider the big meeting earlier this year between Xi and all the tech leaders, we think tech is going to be domestic tech is going to be a big part of that. So that's a reason to be positive there.
Kieran, here in Japan, we're seeing the Japanese yen trading in the narrow range right now at around that 145 level against the US dollar at a time when we're hearing from local media that we might see some cash handouts from the government in order to support the public during accelerating inflation. Is there more room for that story of corporate governance here in Japan, changing fundamentals, virtuous cycle in the economy to boost assets?
I think the short answer is yes. I mean, obviously, the government's a little bit weak right now in Japan, which is often the case, and cash handouts are often one of the results of this. If you think about the corporate governance story, obviously we've had a good few years of that, and really being driven by almost an activist position of the topics or the stock exchange itself. But there are, some cracks starting to appear. If you look at the current issue around Toyota Industries, takeover by Toyota-related entities, doesn't really pass the smell test. So I think, the cash handout issue is probably a result of some of these difficulties starting to creep up. And don't forget, the Japanese economy is not strong in the face of rising inflation, and that does hurt consumers.
Kieran, before we let you go, we're getting the latest lines out of California that the state has asked a judge to halt President Trump deploying military in L.A. Governor Newsom also continuing to argue that Trump's use of National Guard and Marines is illegal. This, for me, is reminiscent of what happened during the Black Lives Matter protests as well across the United States. I wonder if any of these political turmoil will have any long-lasting implications for the broader markets and the attractiveness of the U.S.
Well, of course, it's pretty shocking, some of the scenes that we're seeing out of LA at the moment. But the reality is, from a market's point of view, these sort of events tend to be relatively short-lived. We're not seeing dramatic market moves on the back of it. And, hopefully there'll be a resolution quickly.
Kieran, great to have you with us. Kieran Calder, Head of Asia Equity Research at UBP. Still ahead, we'll be examining Australia-China trade relations, including how these discussions over the Darwin report are shaping bilateral dynamics. More ahead on the Asia trade. This is Bloomberg. Trade talks between the US and China are set to continue to a second day in London, aiming to ease tensions over shipments of technology and rare earth elements.
We are doing well with China. China's not easy. We want to open up China, and if we don't open up China, maybe we won't do anything, but we want to open up China. It'll be a great thing for China, a great thing for the rest of the world.
For more, let's bring our senior China politics reporter, James Mager, with us. And, James, it's going to be really interesting. I do wonder what's the willingness to put things on the table, particularly for Beijing, right, given how closely held their supply and technology when it comes to rare earth and critical minerals is.
Yeah, I don't think there's much chance of some kind of massive opening up of China as President Trump is talking about there. But, there has been some willingness over the past few days on both sides to, I guess, solve the problems that arose since Geneva last month. So you've seen the Chinese Ministry of Commerce basically saying they're going to speed up issuance of licenses for rare earth exports. You've also seen them issuing 6-month licenses. So the actual license and the normal licensing process is every shipment needs a new license. But it seems like the Ministry of Commerce is issuing licenses that are valid for a 6-month period of time or a 3-month period of time to try and speed up the process of companies actually getting products onto ships and out of the country. That seems like, I imagine that's going to be a temporary measure. And once the licensing process is actually, fully up and running, they'll probably get back to the normal way of doing things. But that is an attempt to answer the U.S. demands for faster shipment of these rare earth magnets. And then on the U.S. side, we reported yesterday that the U.S. is willing to roll back the export controls that they announced after the Geneva talks. So that's on jet engine parts, the software to design semiconductors, a few other things like that, ethane exports as well. So, there has been signs on both sides that they're willing to sort of try and fix some immediate problems that arose in the last month, but whether the negotiations are actually going to get into the broader, more structural problems, the export controls the U.S. has been imposing on China since 2018, for example, there's no indication that they're going to go back and try and resolve any of those issues this time, or even if those are going to be on the table in forthcoming meetings, if they do have them. So, they're trying to solve problems that arose over the last month. But any more than that, I think it's too early.
Yeah, I mean, it's a very difficult and complex negotiation, right? The fact that they spoke for more than, 6 hours in London seems like a good sign. They're speaking again on Tuesday, but I am still skeptical about how much of that time was lost just translating between the two sides. And when will they get to the nitty-gritty?
Yeah, no, obviously in these meetings, there is a lot of time that is taken up with translation. I mean, obviously the Chinese delegates, or some of the Chinese delegates, speak impeccable English. Li Changgang was the ambassador in WTO for years. And when I spoke to him in Jeju last month, he has very good English. People at the WTO say he's incredibly capable of negotiating trade deals in English. From his experience at the WTO and his years as a trade negotiator. So, there will be detailed discussions. Obviously, the translation does take a while. But I mean, think more than that. The first round of trade talks in 2018, 2019 took more than 18 months. And even then, they had to shelve a bunch of the really thorny issues and push those aside to what was meant to be a phase 2 trade deal, which never actually took place. So, 2 days of talks in London isn't going to get to even if there's a possibility of really solving some of the fundamental differences between the U.S. and China on trade or on export controls or on economic relations, 2 days of talks in London isn't going to be enough for that.
What's the view on the ground in China in terms of the sort of psychological advantage side, right? The gamesmanship. Obviously, President Xi was seen as sort of having the advantage. We've been talking about the taco trade, which I presume President Trump isn't super fond of. But at the same time, on China's side, the data continues to be pretty underwhelming.
If you look at the trade data yesterday that came out from May, it's an indication of, I think, the overall strength of China's exports and Chinese trade, despite the problems with the U.S. So exports were at an almost record, even though U.S. exports to the U.S. fell by a third. And some of that is companies moving goods to Vietnam and Thailand to eventually get them into the U.S. So it's not like there's a complete decoupling from the U.S. But I think if you look down into the data, there is a massive amount of Chinese goods that are going to Africa, that are going to South Asia, that are going to South America. It's cars, it's solar panels, it's wind turbines, it's all these other high-tech goods. And that trade, those companies will not be hurt by U.S. sanctions, will not be hurt by U.S. tariffs. And so there is still a lot of demand for Chinese goods, even leaving aside the U.S. So I think that definitely does bring a sense of confidence that whatever is happening in these trade negotiations with the U.S., there is not going to be a complete shutdown of Chinese trade, across the world. And then, yes, as you say, the domestic data is a little bit underwhelming, but there are making efforts to try and improve domestic demand, try and improve domestic confidence, try and improve housing, housing demand. None of those really seem to be having an effect right now. So, President Xi, when he's looking at the economy, is probably not as happy as he could be about it. But then you look at the U.S. economy and the uncertainty and chaos that you're seeing in the U.S., both economically, but then also politically and domestically and civil, with the civil unrest. I think they look at that comparison and they're probably pretty satisfied.
Bloomberg's James Maker there with the latest on the ongoing U.S.-China negotiations. Let's head back to Los Angeles because we continue to see 4 days of unrest. Police have reported looting, vandalism as well, tensions over anti-demonstration protests. Of course, we know nearly 1/3 of California's workers were born outside the U.S., so this might have really big economic and business implications if the protests continue. Let's discuss all of this with Bloomberg's national immigration reporter, Alicia Caldwell, joining us now. Alicia, so where are we at right now when it comes to these demonstrations in Los Angeles, what President Trump is also doing in terms of deploying National Guards, not to mention Marines?
Right, so several hundred National Guard are already in place here in Los Angeles. 700 Marines approximately are headed this way from a base in 29 Palms, which is to the east, about 130 or so miles in the desert. And so we're seeing a rapid escalation of federal forces here in Los Angeles. Meanwhile, protests this afternoon, earlier today, demonstrations were largely civil and without much incident. Those are growing. Those populations are growing outside the federal building downtown. And we're seeing reports now of police, local police, law enforcement declaring an unlawful assembly and ordering protesters and demonstrators to leave the area. What we've seen in the last couple of days is mirrored today, right? Protests or demonstrations start rather small, grow through the day, mostly remain calm, and then as the day continues into evening, we see clashes emerge and ultimately violence. We saw, significant violence overnight. Cars were burned, particularly Waymo cars, the hailing self-driving taxis. At least 5 of those vehicles were burned, and police reported, debris being thrown at police officers and police vehicles and so on. So we're starting to see that ramp up again today of that shift from, largely sort of civil protests to now a little bit, more aggressive contact with police and tussling among demonstrators and law enforcement.
You see across social media a lot of calls for calm, right? Because there is this argument that, these were relatively orderly protests and that the sort of sending in of the National Guard and now Marines is sort of inflaming the situation. Where does this go from here, particularly now that there's, both, legal actions, but also further threats of legal actions on both sides happening?
Frankly, it's a little bit unclear, where that breaking point may be, or if there's a circuit breaker to be had. Obviously, again, the state of California has sued in federal court to block or stop this deployment. The Marines are en route. More National Guard are en route. We're told the governor has posted on X today that an additional 2,000 National Guard troops are expected to be deployed. In addition to the original deployment of 2,000 so far, as I said, only a couple of hundred National Guard troops are here, and they're confining themselves and their activity to the perimeter of the federal buildings in downtown Los Angeles. We don't know if that will change. There is, real legal questions about what active duty military can do. As, centuries-old law says, U.S. active duty military cannot participate as a general rule, in domestic law enforcement. So what we're really trying to sort of wait out is what do demonstrators do and how do they respond? And then subsequently, how do local law enforcement and this growing force of federal enforcement, federal troops, how do they respond? And we frankly just don't know. As I said, it gets violent every day, or it has been getting violent every day. Later in the day, as these demonstrations turn and sort of the anti-deportation protesters tend to go home, and then a different group, or thought to be a different group or mixed group of demonstrators, start to move in and become more violent and more aggressive.
This is not the first situation where we've seen President Trump dissatisfied with California and its leadership, right? Have we heard more about these sort of broader threats to axe large-scale funding for the state and any kind of retaliation when it comes to withholding of taxes from California?
That continues to be sort of a talking point and a threat over the umbrella of all of this. As I said, we're really now escalating into a war of words in addition to the legal actions and the physical confrontations that we're seeing in the streets. We have the simultaneous war of words over social media platforms and public statements from both the federal government and state and local officials, each trading barbs that one is not doing the proper job. Obviously the state of California and California officials have argued, and now in court filings, that the federal government has overstepped and infringed on the state's rights. The federal government has said, hold up, you aren't controlling things in your city, and this is necessary for the protection and well-being of both those federal immigration authorities as well as federal property and sort of the public writ large. Again, these troops are not at the moment engaging in street tussles beyond the federal building. They are not enforcing domestic laws at the moment. That's the real question, is what will progress, or how will it progress going forward?
Right, because the concern right now is that this could also spread, right? I mean, we have seen that the turmoil has been restricted to pockets of Los Angeles, but we've also heard about disruptive demonstrations in San Francisco as well. What's the likelihood now that this could actually spread nationwide at a time when we're seeing these tensions and just anger over deportations?
Certainly, again, you mentioned San Francisco. There's been efforts to rally in places like New York. I think you can expect to see protests and demonstrations in other cities, Chicago, Denver, Phoenix. Will those become what LA has become? That's really difficult to predict because those are different states, different regions, right? Different communities with different ideologies and political views.
Bloomberg's national immigration reporter Alicia Caldwell there with the latest as we continue to monitor that ongoing situation. You're looking at live pictures there in Los Angeles. More ahead on the Asia trade. This is Bloomberg.
We're seeing broad upside across markets in Asia. Take a look at Apple suppliers. A little bit of a mixed picture after Apple unveiled updates to their software platforms at the Worldwide Developers Conference, but AI took a back seat. This is Bloomberg.
Take a look at what we're seeing just about 30 minutes into the start of trade across major markets here in Asia, as of course we continue to watch for further developments on the second day of those London talks on US-China trade. Expectations kind of being supported after officials broadly struck a positive tone after the first day of talks. We are seeing a little bit of upside, both when it comes to Korean stocks as well as in Japan. We're also hearing something of an update, although nothing sort of fundamentally game-changing, from the Japanese trade negotiator as well, saying the key is obviously going to be getting an agreement. They're still making plans when it comes to the next round of trade talks with the US. Not a lot of progress on that front has been reported. We're also watching trading here in Australia coming back after the three-day weekend, also seeing upside of about 0.4%. We're also getting that Australia-June Westpac consumer confidence numbers rising by about 0.5% month on month. We have seen a little bit of a boost when it comes to broader sentiment, given, Shery, we have had the easing measures from the RBA, and that's sort of coming as some relief to mortgage holders and households here.
Yeah, some relief when it comes to Chinese assets as well. The rebound of Hong Kong traded Chinese stocks from the depths of the tariff turmoil, rekindling optimism that those gains have further to run. For more, let's bring in Asia Equities reporter Sang-Mi Cha. Sang-Mi, how much of it is to do with the fact that we are seeing some U.S.-China trade conversations, and what is it to do with the fundamentals also of Chinese assets?
Yeah, the dialogues are going to continue later today, and the Golden Dragon Index rose 2.1% overnight. And it's just a continuation of these anticipation and the whole hopes of moving towards de-escalation. The fact that there was some of the traders who were still worried that the first round of talks will end in acrimony. At least that there is that extension until today, which was widely expected from the markets. That just points to that they're going towards that de-escalation path and willing to make some of that concessions. Of course, the top of the agenda will be the rare earth minerals and magnets, the concessions from Chinese and the reassurances that the U.S. has from China. And then in exchange for some of the advanced technologies, for example, the chips that has the export controls on. And so, of course, all of this is very closely tied to the bull market that we have seen yesterday in HSCEI, the Chinese stocks listed in Hong Kong. And the traders are watching this gauge very carefully. Today, a lot of the traders are again kind of moving towards that fundamental look. They're looking at the corporate earnings again. And today, especially, we'll be watching the Chinese developer stocks as China taps $1.5 trillion fund. It's called the Provision Fund, a government collection of these government subsidies to help boost the Chinese property market.
We also saw the Chinese gauge in Hong Kong moving into bull market territory before those talks. How high are expectations, I guess, when it comes to progress? Because we know that we may not get sort of substantial details out of this round of talks.
That's correct. But a lot of the traders are actually pointing to some of the data. And Morgan Stanley actually said that out of the long-only investors, Chinese equities are still 2.4 percentage points short in terms of their overweight in EM portfolio. So that means that there will be potentially more addition to the allocation side there. And of course, we've seen a lot of these rallies in some of the other sectors like biotech, especially, that has pushed the gauge to bull market. That comes after the whole optimism after a renowned cancer conference last week in Chicago, where highest historic number of Chinese biotech companies actually presented their clinical data. And that is kind of upping the hopes that more out-licensing deals will come in terms of like the global biotech space, just like the one we've seen with 3S Bio, with Pfizer, which was the biggest ever historic deal in terms of Chinese healthcare space, in terms of the upfront payment. So all of this, and also it's cheaper. The valuation, we're seeing that the HSCEI is traded up 9.9 times forward earnings, whereas the Asia peer gauge is traded at over 14 times.
Bloomberg Sang-Mi Cha there. Well, global solar manufacturers are meeting in Shanghai this week amid fresh concerns over slowing demand in China, the world's biggest market for panels. Let's bring in Bloomberg energy reporter Stephen Sapchinsky. And Stephen, I feel like we've been here before. How has the story changed when it comes to the massive overcapacity story, and what are we expecting to hear at this conference?
Would you believe me if I said things have gotten worse? Because at the moment, these solar producers are facing some of the biggest difficulties they ever have in the short history of this industry. You know, we've got 500,000 people potentially coming to this conference. There's a lot of interest in solar, both in China and globally, and yet these producers, amid this rush to build out capacity to create panels and produce the equipment for these facilities, they're operating essentially at negative margins. It's been a race to the bottom, and it's really unclear exactly where it ends. So the mood at the conference we're expecting will be a bit gloomy, because this has been the case year after year. It doesn't seem to get better. Now, what's particularly different this year than previous years is that you're also facing just this run-up in installations. China installed dozens of gigawatts of capacity just last month to help, ahead of new policies or policy shifts. On top of that, you've also got the trade war. Solar panel equipment, but even before Trump, under the Biden administration, had been hit because the U.S. wanted to protect their own industries, and they put tariff and anti-dumping duties on Chinese equipment, making it more difficult for them to market it in the United States. But of course, this time around, the global, the wider trade war, of course, this equipment is also in focus. So the industry is facing quite a bit of issues, not only at home, where this giant growth in installations might slow because of the policy shift, but also because the global trade war could potentially hurt their demand for the product abroad.
And I guess, is this just the fallout from state-led markets in China? I mean, why hasn't there been more decisive action? In a normal functioning market, you would have supply and demand adjusting at this point.
You know, that's a really good question, and it marks the difficulty for the industry, because it's sort of everyone's playing chicken against each other, and there are these hundreds of these companies that make panels. Now, if you take a step back, China wants to reduce their emissions. They want to shift to renewable energy. So on paper, you should be defending your market share as much as possible, because in 10 years, that demand will materialize, or at least you would hope so. Likewise, the rest of the world will also have to transition to cleaner energy sources. Now, what they've failed to do is creating like an OPEC sort of style organization that reduces output together. No one wants to do that. Likewise, there hasn't been this big M&A boom because people aren't sure where the bottom is. So we're still in this wait-and-see situation, but you're exactly correct. Market forces will eventually have to win here, and if people are producing these panels at negative margins, how much longer can they really survive?
Our Bloomberg energy reporter Stephen Stopczynski there with the latest. We are also getting some breaking lines when it comes to comments from Huawei, which are quite interesting when it comes to the resilience of the chip sector, saying that this is according to Huawei's Rong Zhengfei, saying in a People's Daily interview that that China doesn't need to worry about US chip sanctions, that the country can overcome chip constraints via packaging and other means. This is according to an interview in the People's Daily newspaper publication from Huawei founder Rong Zhengfei, also speaking about the openness and the progress that the country will make as well, and saying that basically you don't need to think about the difficulties when it comes to some of these geopolitical blockades and what's being sort of characterized as suppression in this story. He says that it's useless to think about it, just do it and move forward step by step, and that there are many chip companies in China, and many of them are doing well, including Huawei, and that the US has perhaps exaggerated that situation there. So very interesting comments, Shery, particularly in light of sort of some of the buoyancy that we've seen around China tech.
Yeah, we have seen also buoyancy when it comes to Japanese yields, especially in the long end. A lot of volatility there. Take a look at the 30-year yield right now, falling under a little bit of pressure at the moment, given that, of course, we had seen gains, multi-year highs on the long end. We continue to see the digestion of bond investors when it comes to not only the policy normalization of the Bank of Japan, but also fiscal sustainability concerns. We heard from Katsunobu Kato, the finance minister, that it will be crucial to seek JGB holdings by diverse groups. He wants to see more JGB holdings by domestic investors, and that the government will make efforts toward appropriate JGB management. Haidi.
Shery, some of the other stories that we're following this hour, and the leader of Japan's largest opposition party, Yoshihiko Noda, says the country should use the expansion of the Trans-Pacific Partnership as leverage in trade talks with the US. His comments coming after Japan's chief negotiator returned from a fifth round of talks in Washington with no reprieve from tariffs. There's been little progress in talks despite phone calls being made between Prime Minister Shigeru Ishiba and Trump. The UN nuclear watchdog says Iran's stockpile of enriched uranium cannot be ignored and urged nations not to turn a blind eye. The warning comes as the IAEA's board of governors meet this week in Vienna. The agency reported last month that Iran's inventory of close to weapons-grade uranium is at record levels, growing by 50% in the last 3 months. Ukraine says Russia has attacked with drones and missiles early Tuesday morning in Kyiv. This comes after the two sides started a major prisoner exchange. The first groups of prisoners under the age of 25 were transferred. The planned swap of 1,200 people from each side is set to be the largest to date since the invasion of Ukraine. More ahead on the Asia Trade. This is Bloomberg. Australia's government is confronting a fresh diplomatic dilemma with China, how to fulfil a pledge to regain control of a strategic port without jeopardising improved relations with its largest trading partner. Australia's northernmost maritime facility has been under the control of Chinese company Landbridge Group since 2015. The Albanese government said before this year's election it would return that port to Australian ownership, potentially nationalising it if a private buyer can't be found. We also heard from the former Prime Minister, Malcolm Turnbull, telling us that he could have halted the lease in 2015, but security agencies had guaranteed that there were no concerns.
Look, our assessment at the time was that this wasn't a security issue, wasn't a problem. It was assessed by our security people, you know, head of defence, head of ASIO and so forth. Initially the Americans' concern was that they hadn't been warned about it, which wasn't true. I mean, it was a public process. But look, times have changed, truthfully, and I can well understand why there's a discomfort about there being a Chinese company owning, port facilities in Darwin.
Let's bring in James Laurenceson, who's a director of the Australia-China Relations Institute at the University of Technology, Sydney. James, really great to have you as always. So was this sort of a political beat-up, if you will, because of the election environment?
Yeah, I think all the evidence points in that direction. I mean, the announcement was in the middle of an election campaign, and as former Prime Minister Turnbull said, the security agencies, that is those people with the access to the highest, most classified information, they said it was fine in 2015, 2021 and 2023. So I think all the evidence does point in the direction that it's domestic politics driving this. It's
interesting at the moment because when you take a look at the bilateral relationship, obviously much improved over just a few years ago where things were quite awful. Are the conversations more about the opportunities that Australia can seize, particularly in light of what's going on in the US pertaining to China, than diplomatic risks?
Yeah, look, I think both Canberra and Beijing are pretty clear-eyed about the state of the relationship. I mean, neither side is imagining that they're geopolitically aligned. But the fact are, those opportunities that you referenced are real. I mean, the China-Australia Free Trade Agreement, for example, has been 10 years in operation now, and during that time, Australian trade with China has more than doubled. It hasn't increased that much to the rest of the world. So while those risks are real, the opportunities are real too, and both sides recognise the benefits.
And benefits that are also really boosted by the fact that they sort of need each other now with a more unstable sort of changing stance from Washington as well.
Yeah, look, the problem for Canberra is that Washington is not behaving as a friend at the moment. I mean, that's just a fact that the Australian government has to deal with. I mentioned the China-Australia Free Trade Agreement before. Our exports to China now face an average tariff of just 1.1%, where the tariff wall erected by the Trump administration against Australian exports is nearly 10 times that. And of course, our volumes of trade with China are nearly 10 times that of trade with the United States. So, look, when you combine those economic fundamentals and the policy stances in Washington and Beijing, it's pretty hard for Australia to walk away from a constructive relationship with China.
So is this a miscalculation then, make the Port of Darwin an issue now?
Look, I would describe it, just speaking personally, as unfortunate in the sense that it seems pretty clear to me that it really is about domestic politics more than anything else, certainly not about anything, genuinely security related. But if the question is, do I think that Beijing will blow up the broader bilateral relationship if the Australian government does force this sale? No, I don't think Beijing will. There's plenty of things that Beijing doesn't like about the Australian government's decision making, and this would just be one more of them. But I think the calculation in Beijing is that its energies are focused on the US, and there's nothing really to be gained by blowing up the relationship with Australia at this point in time.
I was going to say there's plenty on that plate already, right? So for Australia, though, do you think Canberra, particularly with a renewed mandate from the Albanese government and, very capable hands under Penny Wong as well, do you think the country is sort of executing all of the potential possibilities for what it has to gain?
Yeah, look, I think the Albanese government's doing pretty well. As I said before, it's clear-eyed. It's not walking away from the security alliance with the United States and so on, but it recognises all those opportunities are there, and they're being delivered upon, not just in terms of our exports, but in terms of our imports as well. We know the US, for example, has banned Chinese electric vehicles, but if you walk around Sydney streets, you'll see Chinese electric vehicles everywhere, and that's because the Australian government values that price, that quality offering that China's offering.
What are the other sort of sectors the brain drain could be one of them, particularly with the clampdown on Chinese visas. Rare earths, potentially also an opportunity here?
Yeah, all of those. I mean, rare earths is certainly an opportunity, but for Australia to seize on that, it requires countries like the United States, like Japan, like Korea to actually demand our output. We're always upstream in the supply chain. And the reality is that 98% of Australia's lithium exports, for example, go to China at the moment. That's not because we love China, it's because that's where the demand is coming from. So there's economic realities that Australian businesses and Canberra just have to accept.
James, always great to chat with you. James Laurenceson, who's a director at the Australia-China Relations Institute. We do have much more on Australia Ahead every Tuesday. That's at 10:40 a.m. if you're watching here in Sydney, 8:40 a.m. if you're joining us out of Hong Kong. You can also tune into our Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. You can find that on Apple, Spotify or Bloomberg.com. This is Bloomberg.
Apple has unveiled its most sweeping software redesign yet and big updates to its operating systems at its Worldwide Developer Conference. But it failed to impress investors who were looking for more on the AI front. Bloomberg Technology co-anchor Ed Ludlow has more from Apple's campus in California.
The core of Apple WWDC was Liquid Glass, a new operating system interface that basically takes the UI for all of Apple's operating systems and makes the design more uniform. The UI is translucent, it's able to adapt to content and context, but it's very much based in the work that Apple has already done with Vision Pro and the OS for that platform. They're also changing how they name OS. We're going from a version-based labeling system to a year-based one, but for the preceding year. So for example, for iPhone, iOS 26 will be the latest version. Away from that, just remember that WWDC is a developers conference, and probably one of the biggest pieces of news was that Apple will let third-party developers have access to Apple's on-device large language models. In other words, the developer community can look at Apple's technology, its existing work in AI, and use those tools to help develop apps for the Apple ecosystem. And that's the big part of WWDC. It's not just one single day. It's a time where all of the developers that have been so key in growing the ecosystem for Apple come together, and Apple can say, this is the tools that we've got, you can build on top of them. The stock did drop sharply, literally in the opening minutes of the keynote presentation. And a part of that was senior Apple executives basically saying, we have nothing to say about Siri right now. The kind of core of Apple intelligence and Siri, the delay to some of that functionality, and we won't hear more about that later in the year. Even though expectations around what Apple would or would not say around AI were pretty low going into this, it's a stock that's been under pressure year to date, underperforming many of its Mag 7 peers. But that trading so far in 2025 has been trading on trade risk, tariff headlines, not necessarily on the AI story. The concern coming out today was, well, did we hear enough that we understand the roadmap forward when it comes to Apple and AI? For example, in some of the tweaks and iterations they announced, we saw a deeper integration with OpenAI and ChatGPT than we did Apple's own original work in AI. Even so, the thing about Liquid Glass and a new operating system interface is that it kind of hints at Apple's next era for design, a software foundation. But read between the lines, take the name Liquid Glass, and you might learn a little bit about what's coming next for Apple's hardware as well. Ed Ludlow for Bloomberg News in Cupertino, California.
No wonder we're seeing what Ed told us on the pressure on Apple really translating into the Asian session, with major supplier Samsung falling for the first time in 8 sessions, although others in Japan are seeing some upside, with TDK up 0.9%. Haidi.
Take a look at some of the other stories, Shery, from the corporate front that we're following. Bloomberg has learnt that Barclays is preparing to cut over 200 investment banking jobs. Sources say staff in global markets and research may be impacted, with managing directors the most senior roles affected. The move is meant to give the bank more capacity to invest in priority areas such as European rates, equity derivatives and securitized product trading. Warner Brothers Discovery shares gave up a 13% opening gain to close 3% lower after announcing its split of its fast-growing streaming business from its legacy media channels. The move unwinds much of what the 2022 merger combined with Warner Media and Discovery. The streaming and studios business will be led by CEO David Zaslav and will hold a 20% stake in the new global networks business. Disney says it must pay Comcast almost $440 million more to complete its purchase of the Hulu streaming service. The transaction will reduce Disney's net income in the fiscal third quarter. Disney has already paid nearly $9 billion for Comcast's one-third stake in the business, valuing Hulu at around $27 billion. But Comcast has argued that the business is worth much more. Vietnamese EV maker VinFast has reported a net loss of about $712 million in the first quarter, as 20% bigger than a year ago, despite revenue growing by 150%. The company faces rising operations costs tied to its global expansion plans. VinFast aims to deliver over 200,000 vehicles in Vietnam this year, while doubling global deliveries. That is it for the Asia trade. Our markets coverage continuing. We look ahead to the start of trading in Hong Kong, Shanghai and Shenzhen as these second day of London talks between the US and China on trade continues. The China show is next. This is Bloomberg.